Hi, I'm Simon Roderick from Fram Search. I'm delighted to be joined by Tom Billings, who's managing partner at Beach Equity. Tom, how are you today?
Yeah, good. Thank you, Simon.
So, Tom, I know you're a big cricket fan. We can't get on to business before we talk about the cricket. What are your thoughts?
Oh well, yeah, it was a fairy tale ending, wasn't it, for Stuart Broad? Hitting a six off his last batting ball the day before, and then getting the final wicket. So yeah, I mean, it's been a great summer for cricket. I think both teams sort of played well with their different styles. Probably some missed opportunities for England, but all in all, I think yeah, just a fantastic, fantastic summer of cricket. And of course, we've got Rugby World Cup coming up, so
It
you
just
know,
keeps going. And I
indeed,
know
indeed.
if you're like me, you've probably got some Aussie friends. I saw Piers Morgan described 2-2 as a moral victory for England. I think that's probably a good way to sum it up, don't you?
Well, not only have we got Aussie friends, we've actually got an Aussie colleague who, lo and behold, has got COVID, so isn't in the office today.
Fair enough. Completely understand why. So, Tom, let's move on to Beach Equity and you. People might not be familiar with the business. So, could you tell us a little bit about Beach Equity and obviously about your background as well?
Yeah, absolutely. Well, I'm Tom Billings, one of the co-founders of Beach Equity. Beach is a private investment company that invests sort of 2 to 10 million across later stage and growth investments and SME buyouts. We're sector agnostic, and we invest on what's called a deal by deal basis, which gives us great flexibility in our approach and the types of transactions we do. The other sort of quite interesting thing about our business model is on the investment side, we provide high net worths with access to lower market private equity opportunities, which they otherwise wouldn't have access to. PE itself is it's an asset class that's outperformed most over the last sort of 10 to 20 years, but traditionally it's been funded by a classic LP model where a minimum check size is in the millions. So Beach's model creates an opportunity for individual investors to partake in these transactions with much smaller check sizes.
Absolutely. We've seen huge growth in the whole interest around private markets, venture capital, people trying to diversify away from what is actually a shrinking listed market. And actually, the volatility doesn't always suit everybody. So I think, venture capital growth investments has been a really interesting area for people to move into. Tell me about Beach Equity's approach, because my experience is when I've worked with different companies in the private investment sector, they've all got a slightly different ethos and a slightly different way of working with portfolio companies and with investors. So I'd love to know your experience around SMEs and how you work with them.
Yeah, absolutely. I mean, it's probably worth sort of touching a little bit on my background because it's very sort of, much as it informed our approach. I mean, I've spent my entire working life sort of more or less inside SMEs, but it's been a bit of a winding road to get to the investment side. I actually, started my career on the other side of the table. So I was a PE-backed managing director. I spent 6 years out in Asia, building sort of factories, sort of high performance textile factories, which was a incredible experience early in my career. But it really piqued my interest on the PE model of working with, and partnering with a variety of companies. So I came back to the UK. I spent a little bit of time in advisory, kind of really just learning the mechanics of transactions and being exposed to sort of varying sectors, including sort of tech. But I then launched a small investment vehicle that was looking to invest in and build a portfolio of small businesses. So it was a very hands-on approach. These were businesses that needed a transition or a transformation of some sort. And in two of them, I actually spent a period of time as MD, but always with a very specific goal in mind. So in one of them, I helped it relocate factory. In the other one, I was just building out a specific function before replacing myself with what I call a professional CEO. But over that sort of 15 years, I'd seen the good and the bad of private equity, and I'd seen it from both sides. I'd also seen the sort of positive impact that a hands-on approach can have within a business. But I was quite keen to marry my operational experience with that of a experienced investor. And so that led me to sort of founding Beach with my business partner and co-founder Tommy O'Sullivan. And I think, the first thing to say about Beach is we just absolutely love the SME space. There's a misconception in the UK that large companies drive the UK economy, but actually, some 50% of private sector turnover actually comes from SMEs. They're 3/5 of employment at sort of 16, 17 million. And, really they're the backbone and the lifeblood of the UK economy. And, as importantly as an investor, we see a lot of value in that space. So, coming round to sort of your original question, as far as our approach, I think the private equity market is very good at latching on to buzzwords, and we've seen ESG. There's a lot of talk about value creation at the moment, but at Beach we genuinely spend time working with companies, and importantly, we enjoy it. It's our view that picking the right investment is really only sort of 25% of where value might be created, but actually working with those companies is where we can really make a difference. And we've proven that in the past, and it's an incredible privilege to sort of stand shoulder to shoulder with some of the UK's best entrepreneurs, and we certainly sort of take great pride in potentially playing a small part in supporting them on that journey. And I mean, I guess to deliver that, it's our goal really to only do a handful of transactions a year. And that, gives us the time and resource to actually work with these businesses. And for us, it doesn't just mean turning up to board meetings and asking a few generic questions. It means really trying to understand those businesses, understand how we might fit in as a company, where we might be able to make a difference. Anyone that's sort of operated at this end of the space knows that small companies, they're unformed. We always like to say they come with a high degree of fur on them, but there are always gaps, and we know that from experience. But we'll certainly work with management to try and identify those gaps, and work with them on resolving them. And what that means in practice, it can vary. Sometimes it's the boring or mundane things. It might be supporting just simply the build out of systems and processes or something like that, something that allows the company to build the infrastructure that would allow it to scale. But, and it can be, a common one for us is just simply, supporting them and hiring a new FD. A lot of founders just simply don't know what a good FD looks like, their product people or their marketing people. So, we might help with the hiring process, but I think importantly on the back of that, we would then work with them to sort of get that finance function, kick it into shape, so the finance department becomes core to the business, can actually help inform decision making. So these are small things, but they're critical areas really in growing a business. And I would say a good investor to us, they should be a useful sort of sounding board. We love being the first phone call a founder makes, both in good times, and in bad times, which inevitably there'll be. But we can be that objective set of eyes and ears. And we had a recent sort of good example of this where we went out on a due diligence exercise actually, as we were looking to make an investment into a business that's now one of our portfolio companies. But we went out to South Africa, and our direct feedback actually ended up, really reaffirming that founder's thoughts, and giving him the confidence to make what turned out to be some pretty key decisions. But it can also be more material stuff, and we like it when it is. Another recent example was one of our portfolio companies. We've been able to introduce them to a new geography. So it's an education technology business. They've been very successful in the US, but through our sort of enlarged network, we've introduced them to some really exciting sort of sales channels in Canada. And the one final thing to say about our approach, I think, is, as a company, we really value openness. So that means providing companies with clear and direct feedback. That's both sort of during the evaluation of any investment, it's during the due diligence process, as sort of mentioned, just now, but and then importantly during the investment period. But even if we don't proceed with an investment, we'd like to let the company know why, and often we'll get to know a company over quite a long period of time. We'd like to build those relationships, and even if the time isn't quite right for us to invest right now, we'll keep in touch. We'll periodically sort of meet up with them, and often act as a little bit of a external sounding board, really, often on some sort of quite key areas where they just need that outside view, perhaps outside of the board, on strategy or whatever, sort of direction of the business. And of course, in doing so, we're very clear with them on what we might need to see then to get to the point where Beach itself might invest.
Well, let's talk about that, because actually, just before we do, I can vouch for the fact you are really passionate about business, I think, SMEs, operating models, scale. I mean, obviously, I run my own business, and I always enjoy meeting up with you for a coffee, because sometimes we get to talk about, what I do and or different markets and different, industries. And you're always there, I think, looking to sort of look at what the operating model is. We talked about good and bad revenue. I remember discussing that, and it was all really interesting stuff. So you are very passionate, and it sounds like as investors that you can be as hands-on as somebody wants you to be, but you really want to add value. But a lot of people out there, entrepreneurs, they're growing their business, they're working hard, and they're thinking about what happens in 3-5 years time. What should companies be thinking about when they are looking for external investment? What the criteria and the things that you guys are really interested in?
Yeah, good question. I think the first thing that people really should think about is, whether private equity, venture capital, or external investment is right for your business. What is your end goal? There are plenty of sort of really good businesses out there where external investment or private equity, isn't right. A simple thing to think about, is from the investor perspective, is my business capable of delivering the required return? Be it a 5 times, 10 times, or even, for sort of earlier stage and higher risk businesses, that 20-time return. So it's definitely a sort of question someone should ask themselves before approaching the market. And I think, also importantly, are you as a founder, as a team, as shareholders, are you willing to give up, a degree of autonomy or an element of control? And are you willing to listen to, an external party? Because all good partnerships and relationships are built on listening to each other. So I think, that's certainly the first thing. I think the second thing I would say is, you need to think about the type of partner you're looking for. Get to know the market, begin to build these relationships. I actually had a coffee this morning with a gentleman who, is very early thinking about potentially an exit. It's well in advance, but, we just had a nice coffee, I heard about his business, it was just a really good chat. And he's just sort of getting to know the market, getting to know the people and the players in that market. And, ultimately investing, it's about people. So you need to spend time with potential partners. I think the venture capital market's been quite unhealthy of late because there's been a rush to deploy capital, whereas actually, these are long-term relationships. So you very much need to understand who you're getting into partnership with. And I think importantly, remember it's a two-way process. So as a company, don't be frightened to ask questions. Speak to an investor's portfolio company, and I think importantly, really try and understand how an investor behaves when things aren't going so well as they inevitably will for any small business. And I'd certainly recommend trying to understand quite early on how they might work with you after the transaction's completed. So who might they appoint to the board? Will it be someone with relevant experience, sector experience, operational experience, or is it going to be, which is sadly sort of far too common at the smaller end of the market, is it going to be a junior in some form of sort of box ticking exercise because the firm itself it's spread too thin? across
So
many
a board
deals.
observer, Tom, somebody who comes in and just sits there, but maybe doesn't add any value, something like that. It's just somebody to watch over the investment. Whereas you're saying, if you find the right partner for you, they can add value, not just operationally, but through their network and scale. So it's about doing the due diligence and perhaps asking other portfolio companies what their experience is of working that investor.
Absolutely, absolutely spot on. I think, one final thing, which I think, isn't often talked about, but if you are to, look for investment from a firm that runs a fund, you need to understand where they're at in that, which fund the money's coming from and where that fund is at in its 10-year investment cycle. One of the sort of reasons Beach itself, chose the direct model and didn't raise a fund was, a core belief that, funds themselves can often put a artificial time horizon on an investment that actually bears no relevance to what the company itself needs. So I'd say to sort of founders, be very careful sort of taking money from a fund that might be in the last sort of 2, 3, even 4 years, from the end of that fund cycle, because it could actually cause some issues down the road where there might be a forced sale as, in a few years' time as that firm needs to return money to investors.
Absolutely. And there's lots that sounds like, because obviously if you're running, a certain type of company, you might not understand the VC world very well. So it sounds like before you make that decision, you've got to do your due diligence on the investment community and all the different options available to you. But flipping it the other way, Tom, what are you guys looking for in a business? Because you're sector agnostic and you're not running a fund, so you're really zoning in on a particular business and you're investing in them for particular reasons. Are there certain characteristics that you're looking for at all?
Yeah, very much so. I mean, as you said, we are a generalist, and that gives us a sort of high degree of flexibility. We can also react to sort of macro cycles and things like that. That's really kind of useful as a firm. But I think, if I was to say there are many things we look for, obviously, but I think if I was to highlight two, I think the first thing we want to know is, why is your business unique? Why have you been successful to date? And why will you continue to grow with our support? We sometimes refer to this as unfair advantages, but ultimately, what that means in practice is, we all need to have real clarity on what the company's competitive advantage is, and why, moving forward, we're going to win together. I think probably the second thing is, we want to back great people. We look for opportunities where we believe we can complement the founding team, certainly a team we can work with. We've obviously talked about our experience at Beach, but also, with our model, we're backed by a huge network of former entrepreneurs who invest behind our deals under this direct model. So, that is, incredibly useful. We utilize that knowledge bank both sort of during the evaluation of any investment, but also the investment period. So, we certainly look for opportunities where we might have some insight, and then the potential to sort of move the needle from our side post investment. And I think probably the one final thing to say, and this is important, and it is one of Beach's values. We want this to be an enjoyable journey. It's going to be hard at times. The road for small businesses is never straight, but it should be enjoyable. We spend most of our living lives at work, so we certainly want to go on a journey with a group of people who we enjoy working with.
And obviously in my job, I'm very interested in people. In fact, I'm fascinated by people. I'm fascinated by management. I see certain traits in successful CEOs and leaders in general. Do you see certain traits in successful founders or business leaders too?
Oh, absolutely. I mean, clearly, one of the most important thing is, an energy, a passion for what they're doing, resilience. Probably the number one thing we
Number
need
one.
when working at this end of the market. My mum famously said to me, asked me the question, does everyone else always have these problems? Which I had to sort of point out that, yep, that's SME businesses, and we're just going to bounce from one to the next. You often feel like you're a firefighter, as opposed to a sort of managing director or an investor. But very much, and I think probably the last characteristic we do is someone that listens. It's really, really important. You could very much get sort of siloed in your thinking. So we definitely look for founders who we believe can listen, and we can sit around a table and have good direct conversations, open conversations, but listen to each other's opinion.
Yeah, absolutely, absolutely. And you've identified something there that I think is true the world over. Mums are the best non-execs in the world, so you've identified something really good there. But no, I see traits in people too, and I think actually we've looked at resilience actually quite a lot in our business in terms of when we're assessing candidates, because success isn't a straight line, and the ability to recalibrate and to re-energize and actually re-energize others is really important. Tom, I could talk all day, but we can't. We've both got jobs to do, and I'm sure you're very busy. Thank you very much for giving your insight today into the SME world and obviously the world of private investments. If anybody wants to get in touch with you, what's the best way to do it?
Yeah, absolutely. Can reach out directly. My email's tom.billings@beachequity.co.uk, or drop me a line on LinkedIn. It'd be great to hear from your audience.
Perfect. Well, look, you have a great day and thank you for your time.
You too. Thanks, Simon.